Good morning. Good morning. Good morning. Happy Wednesday, everybody. Gonna let everyone. We got some audios getting turned on. Good morning, Bob from Rhode Island. 39 degrees. I've got you beat. 28 here in Utah. It got cold for a minute. There was a couple of days in a row where it was like 12, 13 degrees when I was looking in the morning. Good morning, Steven. I saw that. Thank you. I hadn't had a chance to respond yet. If you missed it, yesterday we had intro to options in the foundations course. The link was sent out. You should have the ability to access that. It was a good one. I'm getting excited for December as options month. What better way to ring in the new year and celebrate Christmas than with options? All right, let's dive in. Good to see everybody. Welcome out to the Market Watch Group midweek check-in. So, and here, good morning to you, Perry. Stephen has put a call out. He said, I want to see more people commenting in Discord. Agreed. In fact, here's what we're going to do. We don't meet tomorrow morning for the morning, right? We don't have a. So here's what we're going to do. I'm going to be on from 7:30 to 8:30 my time, market opening hour. Yeah, so I'm going to be on there tomorrow. I'm going to be on Discord tomorrow. If you want to ask questions, if no one's talking, I'm going to ask a question. We're just going to have a little conversation via chat and see how we can utilize that tool. So how's that? And then on Friday, I'm going to challenge you guys to do the same thing. I won't be able to be there Friday, but then Friday, continue that conversation. The start of the morning is a great time to kind of talk about, hey, what do we see? Who opened it? What's the news? What are the implications of what we're seeing here? Just like we're doing now. So if you want to join me on Discord, I will send out another invite for those of you who haven't seen one. Cheryl just called me out. She said, well, where's the instructions, Scott? She didn't say it that way. She was very polite. Yes, there will be full instructions coming today. It'll have an invite and it'll tell you how to get on if you've never got on before. So if you've used it before, it'll get you in. If you've never used it before, my Discord admin is my son, who's a senior in college, but it's a technology he's used for years in gaming, right? So he knows how to. So, anyways, it's it's good. lets me connect with him more. So that will come out, Cheryl. I promise you that. Welcome everybody to the midweek check-in. And Steven said the instructions were easy to follow, so kudos to him. I'll let him know that you said that. Here's the disclaimers. Remember, these can always be read in detail in your emails. Here's today's agenda. Opening analysis. Well, we'll tell you what, we've been assessing more strength. One of the things we've said is sometimes these rallies can just come. I had a bit of a snafu on Friday's market, but we had plenty of opportunity. We saw it on Monday. There was plenty of opportunity for us. So I would imagine there's some bullishness here in this room. You're in some bullish trades. That's what we were looking for. That's what our watch list was set up for. Our market posture improved. Is there still? That's going to be the question, right? How much are we looking for now? We're going to look at the opening futures here in just a second. We're going to look at the news. What is the news? We had inflation calm down to a point that, like we said, we were already, our odds were like 6-1, 7-1. We had seen the market essentially showing a belief that the Fed was done. That's what we're pricing in, right? That's what we're seeing here. And the inflationary data was one of the last little hurdles that said, yeah, okay, it looks like we're in that place now. Okay. So we'll take a look at our posture relative to what is going on. If anything, what do we have? More improvement, which would make for the third straight week of improvement. May have a funding bill passed. It looks like the Republicans will be frustrated with their speaker doing the same thing the last speaker did, which is partnering with Democrats to pass a spending bill with no spending cuts. I mean, look, at the end of the day, like, you know, I think politically it's better, right? If you're the cause of a shutdown, that's going to have a lasting impact. I don't know. As long as they get it done, that's all that matters. I don't get me started. I hate politics. Okay, mindset for open trades. What trade should we have? Everything should be there should be nothing bearish at this point, right? Everything should be everything that is new should be bullish. There's been nothing for hedges or anything along those lines, right? If you're in a trade now, it's a bullish trade. This is what I said last week when people are like, well, if you think the market's at resistance, why aren't you putting on puts? Because as I get more bullish, my concern is that if the market takes off, which it did, imagine if you're scrambling to adjust, close, salvage whatever you can from those bearish trades. There's no way you're thinking about getting the right trades on. You're busy unwinding the wrong trades, right? So hopefully you can kind of see how over the last couple of weeks our postures put us in a position to see the strength developing, to not get distracted, because the more you look at the media, they're always late, always lagging, always, right? If they're talking about it, you should have been already trading that a couple of months ago and moved on. That's what we're trying to do here. Okay. We'll look at our shopping list to see, is there anything less? This is always what happens when we have some momentum. Then the question is, well, am I too late? Can I still put trades on? At this point, everything we would be looking at would be continuation, and it's going to depend on your time frame. Which means what we have to establish with any trade you're considering now is how much potential is there. Once we know the potential, we can work our way backwards and figure out, is there a way to establish the risk so that I have my 2-to-1 minimum, 3-to-1 ideally. We'll go through a couple of trades or a couple of stocks that look like that. And then let's talk about the trading plan progress section of the week. You've heard me already mention 2 systems. We're doing trading rules. So if you trade bounce trades, which is what I tend to do, that's what we look for in here. We look for stocks that are trending. That's part of the setup. We look for consolidations. The pullback is part of the setup. We look for the stocks to hold support levels and bounce off of them. Bouncing off of support in a bullish fashion in an established upward trend. That's a system. I can standardize everything about that now. I can standardize what stocks qualify for my watch list. I can standardize what a setup looks like. I can standardize what a trigger looks like. I can standardize where I set my stop loss and how I set my target to establish my reward to risk ratio. I should already have established my position sizing, right? My risk management. I should have that already standardized based on my risk and my parameters there. So, all right, let's dive in. Futures are up a lot? No, marginally. S&P 2.26, the Dow 0.16, the NASDAQ, who's leading us? Technology, 0.5%. The Russell, 0.13. Stock rally roars again as Target soars. Oh, Target. Clobbering muted estimates, but sales fall. Now we've been watching Walmart, Costco, right? We've had a couple of, but we have said consumer discretionary, particularly in retail. That's been an element that we've been watching for. We don't trade earnings. I'm not saying, oh, we should have known. Not at all. In fact, quite honestly, this has been very lackluster, right? This is the first. It's not like, oh man, I wish. Look at what this thing's basically just come down and never done much of anything. Finally, here it's established this range that's just a little bit off of that lowest low right there. Now, the earnings came back good. And at this point, I mean, look, there's nothing you could have. It's gonna open here. This is where Target's gonna open. Yeah, there's some things you're just not gonna. There's no way to look back and be like, this is why we should have done this. This is a great looking setup right there from a stochastics. That's exactly what we would want to see when we see a signal. This is exactly what I would want to see, which is price holding support and starting to bounce. Remember, we said bounce trade, bounce off of it. That's a same low. There's nothing about this trend that would make me think, you know what, I want to trade this. But I have a rule against holding through earnings. I don't hold through earnings, so I wouldn't have done it, right? We've seen plenty that have gone the other way. So there you go. But what does that tell me? It tells me that we were right with where we smelled the money going. Where we smelled it. Oh, it smells like it's going into consumer. Sure enough, right? Institutions take a long time. It takes them months. The institutions have plenty of money, particularly after the consolidation we had in August and September. And October. All through August, September, and October, our full labor market, everybody's working. Everybody's contributing to their 401ks, 403bs, IRA, right? All that money's coming in every week. Were they investing? No, they were sitting on it. That's why the market was going sideways and down. They have plenty of money, which is why when the institutions move, like they have here recently, it can just kind of pop it really fast. But does that mean it's over? Of course not, right? We just have to think, all right, what are we strategically doing now? What now? Okay, what else is going on this morning? I only have one more minute pre-market. Producer prices slide in biggest drop since 2020. Remember CPI and PPI; those were our two big economic factors that we were looking for. Right? The two big economic factors were consumer price index and producer price index. We ended up, you can see here, 3.2. So it did slide even a little bit more. I think we would really like to have seen it, but they're going to just let it go at this point and hope it kind of slides on down into the twos. PPI came back with strength, what we wanted to see. Retail sales fall less than forecast. So that's not bad. We do want to see retail sales fall a little bit, unfortunately, right? Like you might be thinking, Scott, why would we want to see that? Well, because prices can't come down if sales stay high. If everyone keeps buying things, there's no way for price to come down. If prices don't come down, inflation is pervasive. If inflation is pervasive, the Fed is going to continue to act. It's just dominoes. So, but if we can see our sales drop, but not by that much, what were they supposed to be? Sales were supposed to drop down to minus 0.02. Yeah, like if they were, I wonder if they came back even slightly positive. What did they come back? Let's see. 0.1% drop. They had been expecting a 0.3% drop. So it did drop, but not by as much as forecasted. Great. That's perfect. If we can see sales hold up confidence hold up, but ease up at the same time. That's kind of the perfect zone for us, right? That's the perfect zone. Okay, market's open. So let's take a quick peek at our opening range now. And that's going to help us kind of get a sense of what are we looking for here. So here's the SPY. Let's go into the 5-minute chart. If you're going to join us tomorrow on Discord, if you're here on Mondays and Wednesdays, then I would assume that means that you're available in the first hour of the market. Great. You better have a routine. Routines is section 5 in our trading plan. We'll get to that in a couple of weeks, but you should have a pre-market routine, a first hour routine. Do you have a lunchtime routine or if you're not day trading, there's no reason to sit and stare at it. But you want to have like, hey, if I would consider new trades, when would it be? I don't like trading the first 20 minutes. That's what I consider the opening range period. That's what we're looking at here. We're going to watch this for 20 minutes and we're going to see where's the high, where's the low. That's my opening range, right? So after the opening range, we can start to see, well, what's going to come next? I'll tell you this. Let's say that our market didn't recover like we have. Let's say after October, things got worse and we moved from a correction into more of a bearish market. When the VIX is high 20s or higher, I definitely do more day trading. I'm not a day trader, but I know that in that market, in a higher VIX market, swing trading is going to be much harder. You're going to find less trades. It's going to be harder. Day trading, where you have these larger range days, is going to be easier. So what do? I do what the market tells me to do. I don't decide what to do. That's part of what we do with the market posture. We're not deciding what to do. The market is telling us this is what's moving. This is where the money's going. This is what the volatility tells. Like, we're just like listening and saying, oh, okay, got it. Check. Right? So that's what I'm doing here in the morning. I'm trying to see what's going on. Positive open, we're up 0.4. All the markets open at the are positive at the open. What else is coming out this week? So we had quite a bit today. All of it has been pretty positive. The sales were positive. Where am I? Back to Wednesday. There you go. I'm trying to skip days. Did not mean to skip days. The sales came back as good as we could hope. PPI, look at that, 2.9. That's our first foray back into the twos. That's what we're hoping for. The Fed target is 2%, but let's be fair. It's 2.5 on average. If you looked at inflation here in the last 20 years, 2.5 is definitely more the average. Empire State Manufacturing expected to be negative. Surprising number, came in at a 9. Very strong, right? What else? Tomorrow, we have jobless claims just sitting down at the low 2s. The longer it sits down there, the more we think things are fine. Remember, we have that is one of my mechanisms that I watch for to show early weakness in the labor market. If that ticks above 250 for a few weeks in a row, then I'm like, oh, something's happening. We have not seen anything like that happen. So great. We'll keep an eye on that. We've got production and utilization numbers, and then tomorrow, just some Fed speak. But I don't know. At this point, the market's kind of established what its position on the Fed is, and that is that not only that it thinks it's done, right? Not only that it thinks it's done, but also that there may be cuts sooner than later going into next year. So we'll see if that's the case. Okay. All right. Quickly, let's take a peek at what our posture was. Remember, we had our second straight week of improvement. We moved back into the right at the transition phase between neutral and bullish. Short term, still bullish. I don't see that. Just checking in with it. I don't see that changing anytime soon. It could go all the way up to here, and it's still in this same trend that we already have defined. But it's definitely firmly in that position. If we look at the short term, Sandy, I'm glad you can make it back in. When we look at the short term, you can see, right? What did we say? This Friday, it broke. It broke this resistance. And then it jumped. And now what? Now we seem to be moving into a new, I would say anywhere between where we are now and maybe a titch higher. If you look back here, this 453.5. So I think there could still be a little bit more momentum to the upside. Without a doubt. The Bulls are in control. We already scored this higher for a higher high. We scored it a quarter of a point for breaking resistance. Well, maybe we would give this for a higher high, depending on if it gets a little bit higher up. So that could improve. Yesterday we had 97 million on 90 average. That's 8% more. That does qualify. That's going to definitely move. We're going to see our volume lose a couple of selling days from back in this area as these start to fall off. Remember, we're only looking at a month. So as these days back here fall off and we add another one, I think we could see a half a point on volume. So I think we're continuing to see the characteristics of the market strengthen. Let's take a quick peek at the VIX. What are the institutions telling us? So we're already down here at a lower low. We had just this little hiccup, and now we're still pressing down. However, you know that one of the things I'm doing is always thinking, what would make me hedge? I would put a half a hedge on if it broke above that right there. Absolutely. And you might think, why, Scott? Well, because it's a hedge. It's a half a hedge, actually. What I'm really looking for is if we popped above this and then we came back down and then we did something like this. That's what a concern would look like right there. If the VIX does that, then I would have a hedge and a half, right? Because I would have the half a hedge for breaking the consolidation. Then I would put on a full hedge on a higher low. That's my concern. However bullish you are, the more bullish you are, the more you should then define what would cause you to go the other way. Right? When we have extreme sentiment levels is when we're most at risk. So that's why I've developed my hedge signals the way that I have, to be very specifically to counter. Hey, look how strong this is. Great. What would it look like? If you look back here, this is very strong, very strong. And then all of a sudden, as it breaks out, it changes. And you can see that ultimately it from that point, things got much worse. We saw that happen very quickly back here. We saw an early insight into that. The VIX, how do I put on half? Whatever your normal size is. So if my normal size would be 6 contracts, I'm only going to take 3 contracts. The parameters, 5 weeks out in time, 5% out of the money, that remains exactly the same. Yeah. So whatever my position size would be, if it was a full hedge. Now, if it was like, I would do 5 here, I'd probably do 3. It would be a little more than a half a hedge, but that's the gist of it, right? Hopefully that makes sense. Okay. How do I determine number of contracts? So, and this is something we're going to do in the options class. I'm going to bring this over for a second. That's a great question. We do want to make sure that can I pull this over? Okay. Let me bring this over here. This is the Thinkorswim. And this is Analyze. This is SPY. Okay, so real quickly, if I were to simulate this trade, if you're going to trade on this platform, on any platform, you want to get comfortable. This one has paper trading. 5 weeks out, 35 days. Well, here's 37 days. So December 22nd. And 5% out of the money. I already did the calculation. From 450 is 427.50. So I would probably come over here and I would probably go to the 427s. Honestly, I could probably I could look at the 425s and the 430s. I do tend to like $1.45. Or I could go to the 430s. They would cost a little bit more. $1.91, not bad. Now, when I look at this trade here, I'm going to be thinking about half. So if I'm going to lose half of what I'm putting into this trade, if I did 10 contracts, half would be about $1,000. So if your risk level was, let's say, 500, then if 500 was a normal trade, that's a full hedge, 5 contracts, $500 of risk. So a half a hedge would be 3 contracts or 2 contracts, right? So I'm looking at it based on risk. So if I have 4 bullish trades and each one has $500 at risk, then my hedge is going to have $500 at risk. That's what I'm looking to do. It's a hedge is a trade. It's one trade. So that's how I would cut that in half. We're going to talk about hedging specifically when we do the options, because this is but you can see if all of a sudden the market made a 5% pullback, 5% pullback. Let me see if I can't tighten this up. That would be down here around 427.50. This trade that I said has $250 of risk, half, right? Has $250 of risk. If this thing dropped 5%, these contracts would produce about $2,200 in gain. 5% market drop. That's a consolidation. If you were able to have half of this or even one contract for a full correction, full 10%, you'd blow your mind how much it makes. But 5% is really what I would be looking for. 5%, 2,200 on 250 risk. That's almost that's 9 to 1, right? Huge. So I don't account for the number of trades I have on. I don't. I just look at a hedge as one trade. And that organically, you can see I already have a half a hedge and a hedge planned. They're both planned already. Half a hedge and a hedge. As at any time when I'm bullish, I'm going to have a half and a full and even a secondary all planned out. All those dominoes are lined up. That's the thought process. And you could recoup a lot of money on 1 or 2 of these going well. Catching something to the downside can recoup a lot of money that's lost if the market goes into one of these transitionary phases. Okay, hopefully that makes sense. Let me move this back across. Let's go through our watch list, I believe is where we're at. Posture, like I said, looks better. It looks like it could improve at least another 3/4 of a point, maybe a full point. It's going to move us up to 2.75 or 3, increasingly bullish. And let's talk about trades now. So what's happening now? Some of these things really have not given us any type. There's earnings right there. Had a brief kind of it dropped on earnings, came back, and then just boop, 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 boop. Now where are we? Well, at this point, you can see this is a definitely the last major resistance level. We're within $2 of that. So am I thinking, hey, I want to trade Apple? Well, if Apple only has $2 before it hits a major resistance, no, there's nothing there for me. I like Apple. And when Apple consolidates, it could pull back all the way back down here to this 181, 190 to 180. That's a $10 move. That's a 5% retracement. That's not much at all. Definitely looking to trade it though. You can see Adobe here already pausing. It's sort of in its consolidation mode. We just haven't seen much of a pullback on this thing yet. AEO. That was one that it kind of pulled back and then it turned. I don't know that had a signal. This is one I thought somebody in here had traded this one, maybe not. Tell me if you did. Here is Aflac. Aflac turned and was this actually, I would say, is a viable if you got into Aflac or AIG. Either one of these I would say are viable. Right? Either one of these are viable. Today, though, a little bit of a retracement. So just because things are bullish, you can see, look at AMD. AMD today is down a little bit. You can see that your stochastics, you're overbought. It's pulling back. It's very difficult to want to put a trade on. Yes, there was this one day here. And then yesterday it kind of popped. But for the most part, ever since this last day, it really is just kind of just like did nothing pop. And then it's just kind of sitting here now. I'm still waiting for a consolidation. Amazon, same thing. I'm waiting for a true consolidation. APH, overbought. If you're in some of these, this is one that we had been looking at for a possible turn. Capital One. That gave a signal back here. And you can see it's a little bit stalled today, some of these. Costco, look how strong Costco is. That was one that we looked at, identified. We said that's a good looking one. That one right came through here. You can see there was a small pullback and then it turned. That's what we said was a flag. It was a bullish pattern up. Then it gave this little flag pattern and it broke right there. You can see that the stochastics gave a turn right at the same time. There. And it's moving. Looks nice. Industrials, Copart. Man, look how strong that is. That sucker. Now there's earnings. There's nothing we can do on this, but see if the earnings bring it back down. But I'll tell you what, there's some momentum there. That we've been watching that one. CrowdStrike, same thing, very strong. Here is Dell. Dell. I would say Dell is moving into buyable position right here. It was just kind of hanging out, overbought, and now on this pullback. Do we have time before earnings? Yes. I think there's plenty of time. Right? So if this pulls back, I would say my range for a trade is anywhere from 70 to 72, which is about where we are. Right? So right now, as I watch this thing pulling back, this is kind of what I'm thinking here. This is my zone. Right? And I would say I have the same kind of a zone in here. Not quite that big, probably, but as this pulls back in here and then starts to stabilize, as this drops down into here and then turns, that's your signal. Right? Whether, I mean, it doesn't have to be. That's the signal I'm looking at. I'm watching this. This is a 7-3 stochastics. It's pretty responsive. I'm looking for price, which is the candle, and momentum, which is the stochastics. Now, here's a question. You might say, Scott, are you willing to anticipate if you get one but not the other? Well, now, maybe. Remember that when our posture was down at minus 0.5, the answer was no. Last week, when the market improved, but it was still like a 1.25, the answer was no. This week, it's like probably not, but all of a sudden, so you're saying there's a chance. And now all of a sudden, it starts to become a maybe. The stronger the market conditions get, this is part of why we want to be in tune to the conditions of the market so that we can say, hey, you know what? Yeah, now I'm willing to jump in a little early, because what I don't want is one of these days where it's like I'm thinking about it, it's getting ready, and then all of a sudden, bam, it's up 3%. And you're like, oh, I missed it. Then all of a sudden you're on the other side, like, well, now am I chasing this thing? You guys all know exactly what I'm talking about. I know that there's some heads out there nodding like, yeah, I've done that for sure. Great. So then you start thinking about anticipation. When is it appropriate to anticipate? Stronger the market, the more appropriate it becomes. Remember that the stronger the market, the harder it is to overtrade. The harder it is to overtrade, the more likely I am to anticipate a trade, because, hey, slap it on. Let's see what happens. Conditions are good. Remember the saying, everybody's a genius in a bull market. Great. I want to know when I'm that genius, right? I want to know when I'm that guy so I can step up my risk and my activity level without a doubt. Okay, so this, as we talk about these that are overextended, you can see we've been kind of riding this overbought zone for a while. This thing has just kind of got to a point. This is like, it hasn't done a lot more, but it also hasn't given us opportunity. So be patient. Let it come. It'll come. Be patient. DHI, home builders, man, these home builders have been killing it. It's just that there's just not that much inventory. So the home builders are just creating new inventory and they're selling it like hotcakes, right? Here's the Dow, very similar. Electronic arts, communication services, strong but overbought. That's going to be an assessment that we have over and over. Strong but overbought, which makes it difficult to put the trade in, right? Got out of VHI. Yes, very nice. Fastenal, looking for a consolidation. Gold, watch it, but don't trade it. I mean, you can see Google, we've moved higher for 2 days on red candles. It's like this is coming down. This has moved up, but it's just kind of like, I don't know. What am I thinking here? I'm thinking I would really like to see an actual consolidation followed by an actual turn signal. That's going to give us opportunities to trade right there. And I'm going to wait for those to develop. GPS gap. Gap gave a signal yesterday. It's moving today. What was yesterday? Problem with yesterday? We said we only have 3 days. Earnings are tomorrow after market. So you have today and one more. Anyone trade AEO or GPS? Let me know. IBM was one that we said we liked. You can see it pulled back, turned, no, and then right basically through here is where we kind of got our signal as it pulled back and turned out of it. Now it's moving. Anybody take this one? This is one that I did take. IBM is a one that I've traded a couple of times through here. Okay. Intel, remember we talked about a cup and handle? It did not give much of a handle, but it turned and went. Too late for IBM. Okay. What would make us too late for IBM versus not too late for IBM? I'll tell you this. What I would be thinking here is, number one, I want to look at some levels that I can find risk. So like here, I could put my risk there underneath yesterday's low. That's 147. Let's go a little underneath it. So 147.50. So that's about $3.50 of risk. I'm going to move the stop tomorrow, or at the end of today, I would move my stop up to today's low, which means my stop would raise by about $1. In the first day. I would take about a third of the risk off of this trade. That's a good thing. But the question is, if I'm risking $3.50, do I have $7 of gain potential? My gain potential would need to be up around 158. Okay, well, from here, 136.5, we did 140, that was 13 points. So if I'm from here, and I usually go body, I think I did that here, 136. Yeah, I didn't go to the very lows. 136.5, 146, that would put us up at 159. Okay, 159. I think you have about $8 of potential here. Could you risk 350 to get it? Yeah, I think this is in the realm. Absolutely. In the realm. Now, if I didn't like this risk, what could I do? I could go to a 4-hour. And that's going to make things a little bit tighter still. And I'm going to say, you know what? I'm going to move my stop. You can see here, if I put my stop not on the current, but prior candle, my stop would be already at 148.5. I would be already closer. So now I'm only 250 of risk, right? 250 of risk. And then I'm going to tighten it along this. And I'm thinking I'm going to try to catch one of these right here. So those are the types of techniques that you can use to still, I mean, it's still only these candles are every 2 days, right? These are 4-hour candles. They're not like they're day trading candles by any stretch. You haven't sped it up by much. Okay, let me go back into the regular candles. Let's get through the rest of this list. I'm going a little long. I apologize for taking too much time. IWM, we said small caps. Right? We said small caps. Did anybody pull the trigger on small caps on Monday? And I said, if I'm going to trade small caps, it's going to be IWM. So yeah, that's good news to see this moving like this, right? We've said that's the kind of thing that we need to see to continue building our confidence in this market. Meta overextended, strong but overbought. Strong but overbought. Strong but also overbought. Earnings coming up as well. A lot of strength there. Think about those three companies. Meta, communication services leader. Microsoft, technology leader. NVIDIA, chips, technology leader. Yes. NWSA, that's a maybe right there. I think you could look at that and say, yeah, you know what? I might take that. It's going to have a hard time getting above 22. That's the problem for me. It only has about $1 of upside. I think you could probably risk 30 cents for that dollar. I don't know. That's a maybe. That's a maybe. Let's go back to, nope. Let's go back to candles. PDD, that was one that actually gave a signal back here and it was just kind of grinding along. Now it's starting to accelerate. I like that stock. That's a good stock. Retail. PGR. There's some concerns in the there's some concerns in the financial sector, particularly with insurance companies. So we'll keep an eye on it. No trends are broken by any stretch. PLTR, okay. Not much there. QQQ, overextended. Strong but overbought. Strong but overbought. Strong. That one actually kind of gave a signal right here. I thought about it, but by the time I got this here, too much reward, not enough expectation for risk. Great, keep watching it. Shopify on Monday gave a signal. Did anybody, this is on our list. I did not take this one, but did anybody take Shopify? That's a nice mover. SMCI. What does our opening range look like real quickly now? That's why we're not fooled by first candles that are bullish, right? Second candle tested higher, came back, third candle dropped. Now where are we? Well, here's my opening range. Let's get a straight line out. And this is what I'm looking at for my opening range. One there and one there. Right? So you can see we tested below it, but then it came back and it held. It's holding right now, but it very much, this is concerning. If we come like this and we break below it, yeah, I think we'll end up probably back down around this level down here. We'll keep an eye on that. Okay. So a lot of these strong but overboughts, what do we need them to do? We need a consolidation. That's what we need. We need a consolidation. Let's wrap up the watch list here. Can I look at Boeing? Of course I can. Press. Of course I can. Tesla gave a signal on Monday. Right? We said that's a signal on Monday. Bam. In fact, we saw it earlier on Monday when it was back down in this area. We said that's a signal on Tesla. So let me know if you took Tesla. Boeing is industrials. We've seen some increased strength there. Boeing absolutely, we said, broke the consolidation, higher high, made a pullback, turn. This is what I'm talking about. That's the signal. We don't need that to happen down here, you guys. It's not going to happen down there for a lot of these stocks. It's going to pull back and it's going to turn back and give you this momentum cross somewhere in the 60s. Right? So it gave a signal. You had 3 days through here to catch this thing before it made this move up here. Now what? Now it's up here. Now the volume is dropping. It's starting to slow down a little bit. What would I be thinking? I'd be thinking, if I haven't yet, I'd be selling half of this thing probably. I'm now 5 days into the move. And then what? And then if it hasn't moved much higher by Friday, I'd probably take the rest of it. And then what? And then I'd wait for it to do this and trade it again. That's what I want. Another pattern. We don't want one. We want a trend which gives us 1, 2, 3, maybe even 4 of these in a row. That's what we want, right? That's what we're hoping is developing in front of us right now. And that's what our posture will show us, is if it continues to build, we'll be like a 3, a 4, a 5, and then now we're putting some money on. Big news on China order hopes. Okay, so Tesla we liked. Visa, I mean, I like it, but it's not giving much of a signal. Here's the VIX pushing down still. WMB, that was, I said, my favorite of the energy companies on Monday. And it gave a signal early yesterday. That's my energy horse right there. What am I looking for? Oh, I mean, at the very least, I'd like to see if it can get up into here, maybe near 37. Looks good, right? That's the pattern, though. What did I have? I had a higher high, then it pulled back, then I had a higher low at or near support. The candle starts to bounce, the stochastic crosses. That's the signal. That's not a hard signal, right? That's the signal. Anything on my list that shows that signal, I'm going to be like, yeah, that looks good. Let's be ready to take it. Of course, I'll be concerned about overcorrelation. I don't want to overtrade it. Here's Walmart. Walmart was another one, right? It had a consolidation and it turned. And this turned. We had earnings. Earnings are coming up. That was the biggest concern right there. They're tomorrow after market. No, before market. Today's the last day. If you traded earnings, you got what you got. That's it. Now we're done. Here's energy. Energy has recovered a little bit, but I'm concerned. Certainly my WMB trade, I recognize energy starting to slump a little bit. Financials actually looks pretty good, and it's not insurance. What does that mean? It means we need to make sure that we search the financial group. Here is industrials, looking strong, like Boeing. Here's Staples. You can see everything is showing strength. So there are trades. I'm assuming you're in some trades. There are trades on. We're still, we have had signals, and there's still some that we're waiting for signals. But I'm expecting my posture to increase. We'll see what that means. Remember, I'm going to send today's email, and then I'm going to send a separate email with Discord. I'm going to send it separate because it's pretty long with the instructions. So I want it to come by itself. So if you're looking for, the recording will come in one, and then you'll see the other one is Discord. If you want to join us tomorrow morning from 9:30 a.m. to 10:30 a.m. Eastern time, in the Discord channel for some chat, we're going to be there. So all you got to do is, register on Discord, accept the invite link that I send you, and you are in. Say hello. Stephen has issued a challenge for people to participate there because it's a great resource. All right. It's good to see everybody. Thanks for the extra 8 minutes. Remember, tomorrow night, options part 2. If you missed part 1, go watch the recording before so that you can be kind of where we are. It's a full 45 minutes, but it's a good opening presentation to expose you to options. Make sure you're comfortable with some of the terminology. Have a great rest of your day. See you tomorrow morning via chat. See you tomorrow night via Foundations. As always, happy trading.